The last conference, someone had asked you about gold, and you told a lovely parable. And I got a series of questions for you about gold, and you can either answer the question or go back to that parable. And the question is, have you ever owned gold? Would you ever own gold? What do you know about gold? And 100 other. And that was from Paul Brodsky. Paul?
Well, I actually tweeted in the session with Peter Brookvar's session, when you spent about 80% of the time talking about the price of gold.
Right.
Like these guys know what the hell it is. Peter around here? I mean, Peter knows about as much gold as I know, which is nothing. And I said, Howard Marks was at my house a couple months ago, and I said, Howard told me, and I agree with this. He said, gold is like religion. Either you're an atheist or you believe in God. And so it is true with gold. Either you believe in gold or you don't believe in gold. My problem is, I remember that my mentor, Jerry Jordan at Putnam, I asked him when I was shorting all the internet stocks in February and March of 2000. And I said to Jerry, Jerry, he's a big momentum player, His 5 largest positions are Apple, Priceline, Baidu, and it was Netflix until it lost its momentum. I said, I bet you're buying the hell out of these stocks. He says, that was at the apex of the internet bubble, catalyzed by Blodgett. He says, no, I can't.
Are we talking 99? So
yeah,
this was,
it was
2000.
Or January 2000. He says, no. He says, I don't own any of them. I said, why? He says, because when they go down, which they'll go down, I won't know what the inherent value is. And my problem with gold is that I don't know what the intrinsic value is. I understand the rationale for owning it, the debasement of currencies around the world. But if I owned it and it went down $400, I wouldn't know if it was a buy. Mm-hmm. Because at any point in time, it's like religion. It's based on sentiment. Mm-hmm. And I do know that the 2 most crowded trades in the market are Apple and gold.
Mm-hmm. Apple, at least you can put a dollar value on the potential forward earnings.
Right.
Gold, you have no idea what its intrinsic value is.
Now, in Apple, I've learned as a short seller that the worst thing in the world to do is to short on valuation, which you would be doing. Now, a week after his death, the issue is more substantive.
Which is 5 years out. What's the product cycle look like?
Is Apple the same disruptive innovator without jobs as with jobs?